If you distribute a life insurance policy to minor kids when you pass away, the courts will appoint a guardian to manage that money on behalf of your kids until they turn 18 years old, and then they will get the rest of that money in a lump sum. There's two main problems with this. It's very likely that the guardian is not as financially savvy as you would like them to be to manage that money on behalf of your kids, and then your kids are getting a lump sum of the rest of the money when they turn 18, and it's very likely that they are irresponsible with money at that point. So there's a good chance that your life insurance payouts will get blown if you're passing that money down to a minor. Now, there is a way that you can get around this. You can set up a revocable trust as the designated beneficiary of that life insurance policy, dump that money into the trust when you pass away. The trustee will manage that money on behalf of your kids, and then you can distribute that money out to them in a controlled fashion on the back end. So while your kids are minors, the trustee could give money to your kids to take care of them, to the guardian to take care of them. This would be things like housing expenses, basic needs, educational costs, healthcare costs, etc. And then when they become of age, you could, goodness, I stumbled there. You could control the distributions on the back end. It would be things like when they turn 20, 25, 30, when they graduate college, get married, buy their first home, for healthcare costs or educational costs, or you could reinvest that money on their behalf, let them live off the distributions, but not allow them to touch the principal of that investment. That way you are reducing the risk of this money getting blown for stupid reasons. If you want help setting any of this up, click link in the bio, fill out the form, and schedule a time to talk some more.